Good afternoon. I'm Steve McHenry, Executive Director of the Maryland Agricultural and Resource-Based Industry Development Corporation, much better known as MARBIDCO. And today we're going to cover several things, including an explanation of why MARBIDCO was created and how it operates. We're going to then get into a short overview of farm business lending from a banker's perspective. And then we're going to talk more specifically about MARBIDCO's loan programs for farmers, as well as some targeted grant incentive programs that MARBIDCO offers. And then finally, we're going to delve into MARBIDCO's very innovative next-generation farmland acquisition programs. MARBIDCO was created over several years in the early to mid-2000s, finally beginning operations in 2007. Essentially serving as the state's agricultural finance authority, serving the entire state of Maryland without any limitation in terms of geography. We focus specifically on farming, forestry, and the seafood and aquaculture industries. So think food and fiber production and processing, plus horticulture and equine. So we, again, as I mentioned, we're focused on food production and processing, including table crops, commodity crops for both human and animal feed. I mentioned seafood and aquaculture. That includes everything from farm-raised fish and shellfish to commercial fisheries to seafood processing. I mentioned horticulture, meaning the greenhouse nursery industry, as well as the equine industry, which is a pretty significant industry in Maryland. And then finally, we also have jurisdiction over fiber production and processing, meaning wood products of all kinds, as well as products from animals like wool from sheep and alpacas. So really the gamut of agricultural production in the state. So we were created to deal with these top concerns that were made evident at the time over several years and really continue on to some extent to this day. Concern about a lack of affordable access to credit and capital by farmers and other rural business owners, the need for information, particularly referral to the appropriate entities that could provide help with business planning and that sort of thing. A lot of need around help for young and beginning farmers. The average age of the farmer in Maryland today is 58 years old, and the trend has been going up for several decades now, and certainly there's a concern about the next generation of Maryland's agricultural producers really being in business and providing food to the people of Maryland and around the region. And then also a concern about helping farmers to diversify their operations to make them more profitable and hence sustainable. And then finally, Maryland is a rapidly developing state and is really a concern over the loss of rural land. So MARBIDCO plays a role in helping to facilitate rural land preservation. We're governed by a board of directors consisting of 17 members. 6 of those members are ex officio voting members from the 6 state agencies who you might expect would be on the MARBIDCO board, including representatives from the Maryland Department of Agriculture, Department of Natural Resources, Department of Commerce. University of Maryland Extension has a representative serving on the board, as does the Maryland Food Center Authority. And finally, the director of the Rural Maryland Council also serves on the MARBIDCO board. And then the governor appoints representatives from various other segments of agriculture, forestry, and seafood industries, as well as from commercial finance and experts in rural economic development. We endeavor to partner with whoever we can to provide resources to farmers, and we work in collaboration with a great many entities. And right at the top of the list are the commercial banks and the farm credit system. We've made loans with more than 20 commercial banks and the 3 farm credit associations serving Maryland, as well as 4 local government revolving loan funds. The 3 farm credit associations have been really important partners to us, and we're going to hear from one of them in a little while. We partner, of course, with the state agencies who I've referenced previously, including particularly MDA and DNR. We work closely with the USDA offices that serve farmers and other rural businesses in the state, including Farm Service Agency, Rural Development, and the Natural Resources Conservation Services. We have 5 rural tri-county councils that have a role in helping to develop the economy of rural areas, and we work with them in various ways, as well as the local economic development offices. And certainly we endeavor to partner with the individual farm and commodity groups that have needs and other rural industry associations. And we work closely with the Maryland Agricultural Land Preservation Foundation as well as local land trusts and other private entities. So we were established to address several functions. First and foremost, of course, was help to develop the food, feed, and fiber production industries and support markets related to those industries. As I mentioned, we have a role in helping to facilitate rural working land preservation. We're not an easement holder, but we help to facilitate the financing that leads to the permanent preservation of farm and forest land. And then, of course, the big one is we have a role in helping to alleviate the shortage of non-traditional capital and credit and make that capital available at affordable rates of interest. Today, we offer 15 financial programs, and we endeavor to work really quickly. I mean, we pride ourselves in turning around loan and grant requests very rapidly. We like to say that we work at the speed of business, and that was one of the reasons why we were set up to where we were as sort of a quasi-public agency rather than a regular governmental entity. And another one of the things we do too is we help facilitate silo connecting, bringing together multiple agencies that serve farmers and other rural business owners, and connecting them together and making sure that each other knows what the other is doing and what resources they have to offer farmers. So to date, we've been operational for 13 and a half years, and we've funded over 360 loans and 340 grants. You can see there our loan volume is $55 million altogether, leveraging, importantly, $160 million of commercial lender capital. And in the process, we've helped nearly 250 young and beginning farmers receive loans, and more than half of those were their first farm purchases. And as I mentioned, we work rapidly, and our average approval time from start to finish to get application comes in to commitment letter being issued it takes just about 15 days on average, and we usually guarantee that there will be a letter issued in 21 days. So we work as fast as we can because we know the clock is ticking, especially with real estate purchases. We also have made over 340 targeted rural business incentive grants, totaling just under $5 million for a whole wide range of activities, very often involving value-added processing support. We endeavor to incentivize county governments to make investments in agricultural development in their areas, so we make a number of small grants to help leverage county resources, and in the process, we've helped nearly 150 young and beginning farmers receive incentive grants. And then finally, we have this thing called our Next Generation Farmland Acquisition Program, including both an original version of that program as well as a new small acreage program that we launched just this year. In the original program, we're now in our 4th year, and we've so far helped 23 young beginning farmers receive financing totaling nearly $7 million, and I'm going to go into detail in that program at the end of my presentation. But before I get to the details of the Next Generation program and some of the loan programs and grant programs, I wanted to give you an overview of what commercial lenders are looking for when they receive an application from a prospective borrower. So why do farmers need money? Obviously, to purchase real estate, construct capital facilities such as barns, poultry houses, greenhouses, etc., purchase equipment for planting and harvesting. Farmers need working capital for seeds and fertilizer as well as for hired labor. So these are all reasons why farmers would want to borrow money, but where does the money come from, especially if you're just starting out? Well, it can come from money that the prospective borrower saved up, which is often in short supply if you're a beginning farmer. It can come from family and friends, but those funds are usually limited. Certainly the commercial banks, including farm credit associations, will lend money under certain circumstances. And USDA also has resources available for various purposes, both loans and some grants, which we'll learn a little bit more about later. And then finally, from financial intermediary organizations such as MARBIDCO. So sources of financing from the private sector. These are your commercial loans from community banks, the large regional banks, and in Maryland we have 3 farm credit associations. Mid-Atlantic Farm Credit is the largest association serving Maryland farmers. Colonial Farm Credit serves farmers and other rural businesses in southern Maryland, and then in far western Maryland, Farm Credit of Virginia provides support out there. And commercial lender debt capital, meaning credit, is really very important to farmers because most farmers are going to have a need to borrow money either on a seasonal basis for working capital or for capital purchases such as real estate and capital improvements such as barns. Other sources of funding is provided by the public sector. And generally, the public sector lenders are not going to be competing directly to service customers that the private sector will service. There's no reason to do that. We don't want to be in competition with the commercial lenders, but we want to help commercial banks do what they might not otherwise be able to do because of potential deficiencies in the credit application of a prospective borrower. So in Maryland, we have loans available from the USDA Farm Service Agency as well as MARBIDCO, and there's different programs available that have different criteria, and we'll talk a little bit about that, particularly from the MARBIDCO perspective. And as I mentioned, the MARBIDCO and FSA lending complements the lending provided by commercial lenders. It doesn't compete with that lending. And very often the public sector lending is at or below the market rate of interest in terms of cost that's being charged to the borrowers who are receiving loans. And then in Maryland, the Farm Service Agency also offers loan guarantees, which are an important credit enhancement tool that helps farmers get bank loans when they might not otherwise be able to. So what about sources of financing for business innovation or economic development from the public sector? Again, I'm not going to go into great detail about this, but USDA Rural Development, another branch of USDA, makes loans for and some grants for activities not directly related to agriculture. So the Main Street businesses and things of that sort. But then there are some programs that USDA Rural Development and MARBIDCO both make available for energy efficiency on the farm, value-added processing activities on the farm, and some entrepreneurial activities as well. And then, as I mentioned, MARBIDCO has both loans and grants for beginning farmers for energy efficiency and value-added activity, as well as that support of the county-level agribusiness development efforts. And then finally, there is support being provided by the public sector for environmental water quality enhancement kinds of activities as cost share. So obviously we're all very interested in protecting the environment and the health of the Chesapeake Bay. So the Natural Resources Conservation Service, as well as the Maryland Department of Agriculture, offer various cost share programs associated with helping farmers protect water quality, protect wildlife habitat, and that sort of thing. So a very popular program with the NRCS is called the EQIP program for short. And then the Maryland Agricultural Cost Share Program, or MAX program, is offered by MDA, and MDA makes grants for up to 87.5% of a project cost for eligible activities. So how does a farmer get a commercial loan, especially a beginning farmer? Well, basically, it starts out the same way in that the public sector lenders as well as the private sector lenders are going to be looking for the same kinds of information from applicants. And the difference with what MARBIDCO does and some of our public sector lenders, as well as our friends at Farm Credit, is we have a distinct understanding of the intricacies of agricultural and rural business lending. So that's kind of what sets us apart from many other sort of traditional banks and that sort of thing. So many borrowers, especially first-time farmers, who are seeking financing to start a farm operation or buy a farm, for example, they come from the perspective of a consumer lender. And they're used to sort of a superficial credit analysis being done. For example, when you buy a new car or a used car, the car dealership and the bank they're associated is just going to be looking superficially at the character of the borrower, the cash flow that the borrower has available, and the security that's being offered for the loan. So you're talking about a credit score as reflective of the character. You're looking at an income statement and debt obligations that the borrower puts down in an application form, and then of course the new car is the security for that car loan. And then, of course, depending on the asset that's being financed, if it's a secured loan, the interest rate is typically lower for car or home mortgage, for example, and then unsecured loans, such as credit card debt, often carries a higher rate of interest. Well, with commercial lending, it's rather more complicated. It requires a more in-depth review and analysis than consumer lending does, because a farm is a small business. It's a commercial enterprise. And especially if you're new to farming, there's traditionally significantly more risk associated with new business ventures. So again, the interest rates are going to be commensurate with the level of risk that's being assumed by the lender in making a loan. And so if somebody is buying a farm, the interest rate may be a little less than if somebody is, for example, just borrowing money on an unsecured basis. So in commercial lending, we talk about the 5 C's of credit. And I'm not going to go real deep, but I do want to touch on each of these so that you have an awareness of that. And then I think one of our other speakers will also speak to this to some extent as well. So character, today, in the old days, character was, one's reputation in the community. Well, today, character is principally reflected in a credit score. So we call this typically a FICO score. There are 3 major credit bureaus that commercial lenders have relationships with that provide a score as to one's credit history and potential risk associated with making a loan. And you probably heard that, if you have a credit score of 700 to 720, that's generally considered pretty good, and then it goes up to 850 and potentially higher. For MARBIDCO, our minimum credit score is 650 under normal circumstances, and our absolute minimum is 620. So we're down in that fair to just below fair range when we're talking a credit score in the 620 to 650 range. So lenders are looking at the credit report, they're looking at repayment histories, and all that sort of thing. And again, that is reflective in the credit scores as well. And then at MARBIDCO, we also use this thing called an AG score, which takes a credit score and combines it with some information from the balance sheet to give us a score as well. And our cutoff for an AG score is 160, and we can go as low as 130 with an AG score when we're making a loan. Capacity refers to the ability of a business to generate sufficient revenues in order to pay back the loan. So, lenders are looking at what experience do you have in farming? What markets do you intend to sell your agricultural products in? So we're asking those questions. Commercial banks are asking those questions. And then we're doing an analysis on a pro forma basis, sort of looking forward. What are your revenues and expenses going to be or projected to be going over the next year, 2 years, 3 years? So we're doing that sort of analysis. And commercial lenders will not make a loan if on paper the project doesn't cash flow. In other words, from all your sources of income, together with revenues and expenses associated with the business enterprise, If it doesn't come out positive, it's demonstrating that you don't have the capacity to repay the loan. So we do that analysis, the commercial banks do that analysis, and FSA, I think, does that analysis as well. So very important. There's a couple definitions of capital. Sort of the obvious first definition is the money that somebody has available to make a down payment on a farm purchase or towards a barn construction project. We call this typically equity. So it's the money that is either the cash that's coming to finance the project, or perhaps it's money that's embedded in the asset that the borrower owns, so that equity can be tapped for collateral purposes. Equity is important because it demonstrates to the lender that the borrower has skin in the game. And you'll hear this from time to time, skin in the game. There's also a related definition of capital known as working capital, which is rather more specialized. And this is capital that's associated with seasonal operations of the farm. So inputs needed for seeds and fertilizers versus or hired labor, things of that sort. So business will need to have a certain amount of working capital available, or they can borrow from a bank or farm credit association for that seasonal need. And then a more deeper definition of capital refers to the capital assets of the business relative to the solvency and leverage, debt leverage of the business. And so that will also sometimes come into play, especially if it's a more involved financing. I spoke earlier about collateral security. This is very important. Banks generally on capital asset purchases require a pledge of that asset that they're buying and maybe additional assets. So somebody's buying a farm, the bank's going to take a lien on the farm. In our case, with MARBIDCO, we're typically a subordinate lien lender, meaning that we're involved in financing a project working with a bank or farm credit association, or potentially farm credit and FSA in taking making loans to the borrower to buy that farm. And the bank or farm credit will typically be in the first lien position, meaning they get paid first if there's a default on the loan. And then we're in a subordinate lien position. Then sometimes the Farm Service Agency is involved as well, and they're actually subordinate to us, so we're in the middle of the lien chain in that example. We typically prefer real estate because it's an asset that doesn't disappear in the night. Farm equipment and inventory and things of that sort sometimes have a way of disappearing or depreciating in value over time. And the final C is conditions. This can refer to things that are happening in the economy or in the environment. Maybe there's a regulatory constraint that's made a certain aspect of farming more difficult, or the economy is in the doldrums and certain agricultural products are not quite as in demand. But agricultural lenders tend to have a sense of this and have a little more tolerance for making loans where there's a lot of seasonality and international markets and other variables that come into play that affect our rural businesses. So what does a borrower need to have when they apply for a loan? Well, they need two things for sure that aren't typically immediately thought of by the first-time farmer. They need to have a business plan, and this is a written business plan that just on paper lays out the goals of the business, the experience of the owner of the farm, the strategy for marketing the products, that sort of thing, as well as what we call a pro forma cash flow. And I touched on that earlier. This is the analysis of revenues and expenses year over year, maybe quarter over quarter, sort of detailing the cash flow capacity of the enterprise. And of course, the borrower is also going to need a balance sheet, an income statement, and tax returns. I believe a previous session has gone into great depth on what goes into a balance sheet and an income statement. But all lenders are going to require these documents as well as tax returns as part of the application process. So let's talk about what MARBIDCO has to offer. And our financing programs fall into three broad categories. The first is our core rural agribusiness development offerings, which derive from an annual appropriation that MARBIDCO has been receiving and will receive for 4 more years before we're cut off and will be completely self-sustaining thereafter. And these are several loan and grant programs financed from a very important piece of legislation passed by the General Assembly in 2006 called the Agricultural Stewardship Act. And then we also have the capacity as a financial intermediary organization to handle funds provided by other state, federal, regional, philanthropic organizations to provide higher risk loans for purposes that agency wants to sponsor. So we have a few programs in that category. And then finally, as I mentioned at the beginning, we help to facilitate rural land preservation. And we've taken our capacity to do some creative finance activity and couple that with our great desire to help beginning farmers acquire their first farms. And so we developed 4 years ago this next generation farmland acquisition program, followed just this fall by a new small acreage next gen program. So in category 1, core loans and grants, we target our loan making primarily at helping to fill gaps. We're trying to plug holes. We're not duplicating what the commercial lenders are doing, but rather we're enabling them to do more, and then we're doing a little bit more beyond that if it's beyond the capacity of commercial banks to provide loans, for example. And then, of course, we're making some small amounts of grant money available for targeted activities. Our core loan programs include our very popular Mr. Biff program. That's the Maryland Resource-Based Industry Financing Fund program. We also launched this fall a Pandemic Recovery Equipment Working Capital Loan Fund program, which is built on our previously existing Rural Business Equipment and Working Capital Loan Fund program. And we also have specialized programs for folks that want to plant vineyards, hops, and tree fruit, as well as loans for forestry equipment and working capital. I mentioned our Mr. Biff program. This is our workhorse program, and we've funded over 207 loans since we first started offering this back in 2008. In this program, we make loans available at below market rates. Ordinarily, we charge 3.25% for the first 3 years, and then it goes up slightly thereafter. But because of the pandemic, we've lowered our interest rates this year to 2.25%. And these loans can be used for the purchase of land, farmland. It can be used for the purpose of capital equipment, such as major facilities like barns and poultry houses. And the loan limits are $250,000 MARBIDCO money, which would be leveraging at least the like amount of money from a commercial bank. Commercial bank, Farm Credit Association, or Farm Service Agency. And then we can go up to $500,000 for a real estate purchase, and even higher for a really large project. The bank or Farm Credit Association is typically the applicant along with the borrower for this program. So you don't come to MARBIDCO without the bank or Farm Credit Association ready and willing to make a loan contingent on MARBIDCO's involvement. And normally we're doing about 20 to 40% of the project cost with the money we bring, and the bank is often funding 60 to 80%. So just to give you a simplistic example, let's say you're buying a farm for $100,000. We really would like the borrower to have saved up 10% of the purchase price as a down payment, and hopefully some money for the closing costs, which could run $10,000, $15,000, $20,000 in a typical farm purchase. And then the bank would be providing perhaps 50% of the capital needed to buy the farm, with MARBIDCO providing the other 40%. So that's an example of how the Mr. Biff program would work. And we're very flexible on how that, the terms of the loan. On real estate, we can go out 20, 25 years. On a new building construction, we can go out 15 years. And so we work with the bank and the borrower in providing that financing. We can even do a little bit of interest only for a period of time, if that makes sense from a cash flow perspective for the borrower. I mentioned our pandemic recovery program, which helps to finance equipment and working capital loans of up to $100,000. We've lowered our interest rates in these programs down to just under 3% if there's another public sector lender involved, and 4.25% without. And equipment can be financed for a term of 3 to 7 years, and we can even do an operating loan for 1 to 2 years. The one thing about borrowing money that a borrower should be aware of, you never want to borrow money for longer than the term of the useful life of the asset. So that's why equipment loans generally are no more than 7 years, because that tractor's not going to, last. It might last more than 7 years, but you're going to be putting money into it, after the 7th year. Whereas real estate never goes away, so you can make a loan for 25, 30 years in that example. And then barns and poultry houses are typically financed for 15 years. I mentioned our specialized vineyard, hops, tree planting loan fund program, loans of up to $100,000. We can go a good stretch of time, up to 3 years, with interest-only payments for a vineyard planting, because it takes 3 years once you plant a new vineyard to have a commercial harvest from those vines. So we time the principal repayments to when there's actually revenue to support the principal repayments. So we'll just charge a modest amount of interest while those vines are growing before they're actually producing. And then we have a specialized program for forestry as well, maximum loan up to $150,000. I mentioned we have some grant incentives. Everybody's interested in the free money. We're very targeted in this because we don't have a lot of it. We're primarily a lending organization, but we do want to incentivize certain activities. And I mentioned that we support county governments that are making investments in agricultural development in their county. So we will match them dollar for dollar up to $10,000. And I think I have a slide on that later. We also have 2 value-added producer grant programs, and then we have an urban ag lending incentive grant program as well. So the local government cost share program, again, works in conjunction with either county governments, or in some cases, I mentioned those tri-county councils, those regional rural development councils, they might have a program as well. And we can match them up to $10,000 for some project activities. There's some limitations. We'll fund deer fences up to $3,000, which would match another $3,000 from the county, which would match at least $6,000 being put towards the fence construction by the farmer. So generally, we want to see the farmer have at least 50% skin in the game, where then the county and MARBIDCO might bring as much as 50% together towards that activity. And then we also have grants available for Food Safety Modernization Act upgrades, GAP, Good Agricultural Practices upgrades. So be aware of that. Our first value-added producer grant program is a program that we offer as an overlay to the very lucrative but somewhat challenging USDA Rural Development Program for value-added producers. Once a year, USDA Rural Development has a value-added producer grant offering. You can get a planning grant from USDA for up to $75,000, and a farmer can get a working capital grant from USDA for up to $250,000. But those grants must be matched dollar for dollar with non-federal resources. So we bring up to 15% or $25,000 as a match to help that farmer leverage that USDA grant money. The application is not for the faint of heart. It's challenging. It's not the thing you start on a Friday night and turn in on Sunday. You really want to devote more time to it. really put the effort in, follow the rules carefully. And MARBIDCO requires, in order to leverage that 15% match of non-federal money, that we have your completed application 2 weeks ahead of time. Because what we're going to do is we're going to take your application, if it's complete, or nearly complete, we're going to issue a commitment letter that you will turn in with that application. So it will go together and prove that you have that matching money, because you must document that you have the matching money available. And that program has often been offered in the late winter, spring of the year, but it's gone as late as late summer. So just be aware that it's out there, and stay tuned to the ag media for information about that. Good question. The question was, what does the USDA Value-Added Producer Grant cover? And there's two components. One is for planning. So let's say you want to hire a consultant to do a feasibility plan for you. It can help cover that cost. And then the bigger money is for the working capital. And I don't know if you were in the room earlier, but I did define what working capital is. And working capital is not capital equipment. And MARBIDCO actually has a separate program that makes grants for capital equipment. So working capital can include things like marketing, consumable inputs like bottles and bottle caps, and hired labor. So that's what USDA will provide funding for, but not the equipment that you're going to need to do the value-added activity. But as I mentioned, well, before I get to that, the other question is, what does value-added mean? Well, in the agricultural context, if you're taking a raw agricultural product and transforming it to something that it can't go back to, you have milk and you make ice cream, or you have a wine grape and you make wine. Those are examples of value-added products. There's also a way to target in a segregated way or a differentiated way marketing by perhaps packaging it for a specialized market that would bring greater value. So we have seen some of those applications as well pass muster. As I mentioned, MARBIDCO does have its own value-added producer grant program. We call it the capital assets option, and this is really for equipment because USDA doesn't fund capital equipment with its program. So we'll make matching grants of up to $10,000. When I say matching, we're matching the farmers $10,000 with our $10,000 for that $20,000 or greater capital asset that's being purchased. So any kind of tangible equipment that has a useful life of 7 years or greater is eligible pretty much for this program. And here are the limitations there. We don't like to make a grant for less than $2,500. The maximum amount of funding that an individual farmer can receive over his or her lifetime is $30,000. So be aware of that. And you must have been in business for at least 2 years. So this isn't funding startups. This is funding an enterprise that's been around for at least a couple of years. And here's an example of things that we will potentially fund, including facilities, not just tangible equipment, but production buildings, major fixtures, manure digesters, et cetera. And by the way, hemp processing equipment is now eligible for the first time this year. For our urban farmers, we're helping to incentivize lending by commercial lenders by making grant funds available. I want to thank Farm Credit for their matching support of this grant program. So if you're an urban farmer and you'd like to borrow some money from a bank, we'll bring up to 20% of the project cost or 25% of the overall loan amount, financing amount to a project, and our money is capped at $10,000. So we'd be talking about at least a $60,000 project in that maximum example. But the key there is you have a commercial lender or Farm Credit Association that wants to make a loan, and we're bringing grant money to basically plug into the equity space from the commercial lender's perspective. We also have some specialty lending programs, which I've talked about very briefly at the beginning. We do have a specialized program with funding from DNR and the federal government, NOAA, for oyster farming, shellfish aquaculture. And we funded 82 what we call our regular shellfish aquaculture financing fund loans over the last 10 years or so. And we also have a specialized program with funding from DNR and the Maryland Port Administration for remote setting, which is the nursery operations associated with oyster farming. And we've made a few loans in that program as well over the last 9 or so years. Here's a listing of all of the specialty loan programs that we have available, including the 2 aquaculture programs I mentioned, as well as a farm energy efficiency loan fund program. We will make loans for up to $30,000 for someone who's making an energy efficiency improvement in the farm operation, using a third-party energy audit as the basis for understanding the cost savings associated with those energy efficiency improvements. And then we also have a specialized program in Southern Maryland that was funded by SMATIC, the Southern Maryland Ag Development Commission, for projects that they wanted to fund in the 5 Southern Maryland counties. So I think I've already gone in depth on the shellfish aquaculture program. You can see there loans of up to $100,000. The key thing with this program, which is really nifty, we talked about wine grapes taking 3 years to produce a commercial harvest. Well, to get a 3-inch oyster growing on the bottom, you need about 3 years. So in this program, we actually have an interest-only component for 3 years, and then the loan amortizes, meaning you're paying principal and interest costs back after that time. So we'll have loans that are typically between 5 to 7 years, depending on what assets are being financed, with the first 3 years being interest only. So it's a great program, and what makes it really even better is that if you're a first-time borrower in this program, we're going to forgive 40% of the amount that you borrowed when the loan amortizes. And if you make all your payments, you won't have to pay back that 40%. And if you're a second-time borrower, we'll forgive 25%. So there's significant, basically, grant money in those shellfish aquaculture loans. And again, we can do that because DNR has provided us the funding to do that. And I don't think I need to go in any detail here. All this information, of course, is available on the MARBIDCO website. And here are the details on the remote setting program, loans of up to $30,000. Term in this program is either 5 years or 6 years. And again, we're buying the tanks that you use to take the baby oysters called larvae and the substrate or oyster shell that the larvae needs to set on to form spat-on shell. Once that happens, you put those in tanks that are on land, and you grow them to a certain size before they're put in the water. So that's what remote setting is. It's the nursery operation where the juvenile oyster is set onto the substrate, which is typically oyster shell. And then I briefly referenced the Southern Maryland Revolving Loan Fund, smaller loans of between $10,000 to $20,000 for farmers residing in the 5 Southern Maryland counties, including Prince George's and Anne Arundel counties. And they've modeled this program, since they're providing the funding, to allow us to forgive approximately 20 to 25% of the principal that might have to be repaid in that program for good repayment performance. And there's a list of things that are eligible for financing under that program, including small fruit and hops production, upgrades related to GAP, good agricultural practices, and the growing of livestock, which is something they're very interested in Southern Maryland, is supporting a new livestock processing facility that's being constructed in St. Mary's County. We also have a couple of specialty grant programs that are funded by 2 of our regional entities. SMATIC is making available MARBIDCO funding. For any loan that MARBIDCO makes, we can provide basically an equity match of up to 5%, capped out at either $5,000 unless it's a Mr. Biff loan. I've already talked about the Mr. Biff program, in which case the cap is $15,000. So if you're buying a farm in southern Maryland and you're getting a Mr. Biff loan, we can make a grant of up to 5% of the real estate purchase, matching 5% being provided by the borrower, and that's grant money. That money does not have to be repaid with the additional loan funds that we would be providing along with the bank or Farm Credit Association. And then in the Upper Shore region of Maryland's Eastern Shore, Cecil, Kent, and Queen Anne's County, we have a similar program, does exactly the same thing with any MARBIDCO loan program. And finally, the third category of MARBIDCO financial project investments is rural land preservation facilitation. Today, our efforts in this area are limited to our Next Generation Farmland Acquisition Program, the original program launched 4 years ago, and the new program, the Small Acreage Program, which I'll talk about shortly. We were very fortunate to have the General Assembly identify $2.5 million in some funding associated with the state's land preservation efforts, and going into this fifth year, that will be hopefully not the final year, but we're pretty sure we'll have at least one more year of funding for the Next Gen program. And then hopefully some additional funding for the new program, the Small Acreage Program, going forward. So how does the Next Gen program work? Well, it's really focused on helping beginner farmers, farmers with 10 or fewer or less farm management experience, buy their first farms. And because the state's agricultural land preservation program targets farms of 50 acres and greater, we modeled our program in a similar way so that permanent easements might ultimately be purchased by the Maryland Agricultural Land Preservation Foundation, also known as MALP. So what we're doing in this program is bringing significant down payment money to a real estate settlement table when a farm is transferring to a beginner farmer. And we're giving that beginner farmer 4 to 7 years to sell the permanent conservation easement to one of the agencies that holds permanent conservation easements, most particularly MALF, but there are others, county governments, land trusts, DNR Rural Legacy Program, et cetera. And in this program, we're bringing up to 51% of the fair market value of the real estate to the settlement table. That's 51% of the land only, not the dwelling or improvements on the land, just the real estate. We'll bring those monies up to a cap of $500,000 right to the settlement table in exchange for that easement option that we will have purchased. So we're putting that land on a path to becoming permanently preserved. And that's why we're doing it. That's why we're paying so much towards helping that beginning farmer get on that land. It's a twofold program. We want to help that beginner farmer get on his or her or their first piece of farmland, but we also want to see that land become permanently preserved. So one of the preconditions, of course, is that land is not already under permanent conservation, but it will be hopefully in the not too distant future. So as I mentioned, our target audience is the beginner farmer. We do require that person not own 20 acres or more of land currently. So we really are trying to target these funds to the beginner farmer. And we really are hoping that we're funding somebody who's newer to agriculture. So not the long-time experienced farmer who often will have previously owned a farm, but there are farmers who've been farming for a long time and operate entirely on leased operations. But we're really, and this is not an age-restricted thing. So we're seeing people coming into agriculture who are mid-career and even early retirees who are coming into agriculture for the first time. So this is not an age-restricted limitation by any means. So, and as I mentioned, for the regular program, the minimum farm size is 50 acres, unless it's contiguous to already preserved land. And then we're also looking for the land to be of generally good agricultural value, meaning the land consists at least 50% class 1, 2, or 3 soils. So as I mentioned, we're going to be buying an option to buy the permanent easement at the real estate settlement table. We're going to be conducting an appraisal, and this appraisal is going to be conducted for our purposes, not the bank's. We require in this program that a commercial lender also be involved in providing financing for the farm purchase, and they're going to do their own appraisal. So we're doing our appraisal. We're determining what we think that the value of that real estate is for the money we're going to be bringing to the table as a down payment, and then the bank will do its appraisal based on what the after value of that property will be. And then once we have that option purchase, the land will be temporarily preserved, so you can't develop that property while we hold the option. And then we're hoping that the next-gen farmer will sell that permanent conservation easement to one of the agencies that buys permanent conservation easements. And if that happens, then we get repaid what we advanced plus another 3%. So we're getting back 103% of what we advanced, ideally. And there's a schedule of what offer the beginning farmer has to take, depending on what year in that 7-year period it is. But we're really hoping that that happens, and then that money revolves in our Next Gen program to help the next gen farmer buy their farm. So we're setting up something of a revolving fund with this program. And then here are the contacts for folks as to who they should contact along the way. In this program, we're very dependent. We have wonderful cooperation from our county agricultural land preservation staffers, the administrators of the county ag land preservation programs. Every county has somebody that's charged with doing this. Some counties have 2 or 3 people working in their ag land preservation office. And so you need to be in touch with them. Once you've identified the farm you're going to buy, you've worked out an arrangement with the farm seller, then the next stop is the county ag land preservation staff, who have quite a bit of work to do to bring us an application that consists of actually 5 separate forms, 4 of which must be turned in at the time the application is submitted to MARBIDCO. And we're now working on a monthly application cycle. So on the last day of the month would be the application cycle for the following month. And again, this is not something that can be done overnight. There's quite a bit of work to do, particularly for the county staff, and I'm just amazed at how much effort they put into these applications, because it does take some real time on their behalf, and they do it willingly. They're just outstanding individuals. And then on our staff, Allison Rowe is our team lead for the Next Generation programs, and you can see her email and phone number there. And then either right before or right after you bring us the Next Generation application, you're going to need to talk to your commercial lender, which could be a community bank, it could be a farm credit association. We have worked with both in this program. And then the last program I want to talk about is MARBIDCO's Small Acreage Next Generation program. We just launched this a couple of months ago. We've just received our first 2 applications in the last month. And in this program, we have some special funding for this from through the legislature, due to the efforts of our friends in Southern Maryland. We're going to be able to buy outright at a real estate settlement table the permanent conservation easement for farms between 10 and 49 acres in size. So rather than buy that option purchase that will lead to down the road another land preservation agency buying the permanent conservation easement, we're going to buy the permanent conservation easement at the settlement table and hand it to a local or state land trust to administer. So MARBIDCO does not hold permanent conservation easements, but we work with those other agencies that do, and we're going to hand immediately over that easement, which means that land is permanently preserved from development. And we're going to pay 40 to 60% of the fair market value, depending on the number of development rights that are being extinguished at the time we're buying that permanent easement. So the amount will vary a little bit. And so we're just launched that program. We're excited about it. It's going to help a lot of beginning farmers, we think, especially in Central and Southern Maryland, but across the state, get access to their first farms in terms of an ownership situation. So that's a quick overview of MARBIDCO's financing programs. We're really here focused, not exclusively, but we really want to help young and beginning farmers. Of the 740 projects we funded so far, over 417 of them have been for young and beginning farmers. You see here examples of a crop farmer in Montgomery County. We helped recently, to a next-gen farm couple in the Eastern Shore, to an oyster farmer who was 9 or 10 years ago decided he was going to start an oyster farm. He's an entrepreneur, and now he's producing more than 3 million acres a year on his farm. So it's a wide gamut of projects and business types that MARBIDCO is able to fund, and we certainly encourage you to reach out to us as you are considering your farm enterprises. So here's our website, www.marbidco.org, and thank you very much for your attention today. Is there time for questions? Sure. Are there questions from the audience? Well, I must have done a terrific job in explaining everything. Thank you so much for your attendance today.